Welcome back to the show. Let's talk to Conor Campbell. He's a financial analyst at Spreadex. Let's do an equity roundup. Let's kick off with Debenhams. It's mnemonic DEB, down 17% in 2017. What's going on here?
Yeah, no, you can see it had, up until September, a really, really bad year. The main event, I guess, this year so far has been its half-year figures in April. There was a 6.4% slide interim pre-tax profit. Like-for-likes in the UK were down 1.3%, awful. But the main news around that was Debenhams redesigned, which was the new strategy announced by Sergio Bucher. I'm not quite sure how you pronounce his second name. He's the new CEO, took over in October last year. He come from Amazon, which is, that's a pretty big get for Debenhams, basically, which is always on the verge of being the new BHS. In terms of that Debenhams redesign plan, the main focus was turning Debenhams into a social shopping hub. So, more space given over to restaurants and beauty services, so things like facials and manicures. And I think they're going to, bump up their online offerings, which I guess sort of goes against it being a social hub, but any company in 2017 needs to sort that out. And they're going to reduce clutter in the store by 10%, which, if you've ever been into a Debenhams, is probably a wise idea.
But
really.
I like clutter, in terms of particularly WH Smith's, okay, and the share price is at record highs. So.
I guess. I think the issue with turning Debenhams into a social shopping hub is that Debenhams is a store found in high streets and shopping centres, aka things that are already social shopping hubs. And I don't really know if people are going to go to Debenhams. A hub within a hub, really. Anyway, in June, its first quarter figures sort of showed the uphill battle they're fighting, trying to turn it around. I think UK like-for-likes were down 0.9%, but 2.4% on a constant currency basis. The CEO said that the more volatile retail environment could impact full-year profits as well, so it's not great, really. In terms of Thursday's full-year figures, I think full-year pre-tax profits is expected to be down 7% to 95 million. Again, not great. The UK like-for-likes, I think the wrong side of flat. However, the reaction to it is, I think, going to be dependent on what kind of other turnaround plan details they reveal. At the start of September, they announced that I think they were splitting the company into 3 divisions, which would be fashion and home, beauty and beauty services, and food and events, each with its own executive committee leader. Now, the fashion and home, which is the most important of those, hasn't got a committed leader yet. At the moment, it's Bucher taking over. So if there's any announcement this week in terms of who's taking over that division, and dependent on the size of the name, because if it's a sizable name that has previous success in the fashion division, then that could lift the share price a bit. I think what counts against it at the moment is that it saw that very sharp rise in September, which that largely lined up with sterling's rise. I think that was largely why Debenhams was moving higher. So there is room for it to plunge back to those sort of 40p lows. However, our clients is mixed around that 47p mark. There are people willing to take a punt on it due to the turnaround plan, but again, there are also plenty of people that, like I said, perhaps thinking that this could end up being the next BHS.
Understood. Okay, so let's move on to Amazon. That's obviously a better story. On the year, up 30%. What are your latest thoughts?
Yeah, no, it's sort of up 30%, but has got trapped between, $950 and $1,000 in the last couple of months. The last update was in July. You can see it sort of spiked towards an all-time high. I think that was because second quarter revenue far beating expectations. It was up 25% to $38 billion, which is obviously that's massive. However, it pulled back then by the end of the session because earnings per share are coming at 40 cents, which was almost $1 shy of what had been forecast and was massively down on the $1.78 they posted the year before. Obviously, in the last couple of months as well, I guess the thing that 2017 will likely be known for Amazon will be it buying Whole Foods back in June for $13.7 billion.
Yeah.
I think reportedly it bought that to boost the appeal of Amazon Prime in the eyes of, I think, lower and middle income customers. They've added whole food discounts to the Amazon Prime service, so that goes along with video streaming, next day delivery, music streaming, things like that. Just trying to justify that $99 a year to customers that don't earn as much as sort of Amazon's at the moment key customer base, and that's because basically when customers signed up to Prime, they just spend a lot more money with Amazon, which makes sense. If you've got something that is going to be there in the next couple of days, like you might as well. In terms of the third quarter figures this week, I think revenue is expected to be up 25% to 41.3 billion. Earnings per share, however, I think it's meant to be 3 cents against 52 cents last year, so that's not very good. But Amazon is incredibly inconsistent with it doesn't tend to meet expectations on terms of earnings per share, it tends to either massively beat them or massively underperform them. So I think that could be a key metric for how investors react on Thursday. Also, I think investors are going to be interested to see how has Whole Foods impacted business, not only in terms of sales, but in terms of has it driven more people to Amazon Prime? Has that increased interest there? Interestingly, Amazon doesn't actually release Prime subscription figures, so it will be based on the Prime revenue, basically. It releases sort of subscription revenue. Most of that comes from Prime subscribers. So if there is a significant increase in that, then you could arguably pin that on Whole Foods and sort of the kind of discounts they've been doing there. From our clients' perspective, they're really heavily buying around the $1,000 mark. Obviously, there is plenty of room for Amazon to fall, and it's the kind of stock that could get in trouble on the slightest miss. But I just think things like the Whole Foods purchase, and they've got a couple of other things like their Prime wardrobe offerings later in the year, which looks set to expand the company into sort of the fashion division a bit more robustly. You know, it's Amazon, it's a juggernaut, it's hard to argue against, really.
Understood. Okay, let's wrap up with IAG, the old British Airways, up 47% this year.
Yeah,
aware of that. Wow.
It's at all-time highs, which is incredibly surprising given the sector it's in, given the trouble seen by EasyJet and Ryanair and things like that. I think part of that reason is obviously it's the airline sector, but it's slightly different to EasyJet and Ryanair. It's more long-haul flights, it's international business travel, it's slightly less rocky. You know, EasyJet and Ryanair have got in trouble with a downturn in sort of consumer confidence with short-haul flights to Europe and things like that. Whereas I guess people that have got the money to do business travel and long-haul flights probably aren't that fussed by, you know, the economic potential downturn. In terms of its figures, half-year figures back in July, revenue was up 0.9% to 10.9 billion euros. I think operating profit before exceptional items was up 37.3% to 975 million euros. Very healthy. So crucially there as well, the cost of, you know, there was that massive IT failure over, I think, the second Maybank holiday for British Airways. Caused massive disruption. Well, the cost of that came in, I think they said, at 65 million euros, which was lower than the 80 million estimate they'd given at the AGM in June. So obviously that gave it a boost. You can sort of see. You can see in May as well, it saw a boost off its first quarter figures. In recent weeks, you can see it sort of spiked since mid-October. That's good. Credit Suisse was very, very positive around the stock. I think they said that investors were undervaluing the stock by 20%. Wow. And that it had a really bumper fourth quarter ahead of it. So our clients are buying around that 650 mark. I think in terms of its third quarter figures, operating profit before exceptional items expected to be up 12% to 1.4 billion euros. Again, really, really healthy, consistent growth with operational profit. So I think that's why our clients are buying around that 650 mark, despite it seeing quite a spike in the last couple of days.
An extraordinary move up. Connor, as always, thank you very much.
Thanks very much.